I've been extremely bullish for a long time, and my overall outlook hasn't changed. But for the past several months, I've had a slightly cautious stance, not because I've lost confidence in the long-term vision, but because of how overheated the altcoin and meme coin markets became. Historically, when smaller speculative assets start running too hot, they tend to drag the whole crypto space into a correction soon after. And that's exactly what played out this time. A lot of capital has poured into the market recently, particularly from altcoin treasury projects and other speculative ventures. While that flood of liquidity created excitement, it also became a huge distraction. Prices were bound to overcorrect, and that's where we are right now. Bitcoin often moves in tandem with the broader market, so when everything comes crashing down, it usually takes a hit too. Every day, I wake up expecting Bitcoin to surprise everyone with a huge breakout. Maybe a massive candle shooting it to six figures, because, in my view, it's been suppressed for too long. Based purely on real demand and adoption trends, a fair market value could easily be around $200,000 today. Bitcoin's recent volatility has been driven by the same mix of optimism and uncertainty we've seen before. After the pullback, the market seems to be regaining strength, though speculative altcoin trading continues to add instability. Meanwhile, gold's strong rally shows how investors are hedging across multiple assets as they navigate global financial shifts. Analysts like Samson remain optimistic yet realistic. He points out that smaller tokens' unsustainable rallies were the real cause of this correction, but he sees this as healthy, not harmful. Cleansing excess leverage and speculation sets the stage for longer-term growth. Despite short-term dips, his outlook remains bold. He believes Bitcoin's fair value is already near $200,000, and his long-term target is still $1 million. The idea isn't fantasy, it's based on supply, demand, and real-world adoption. The recent correction shook out over-leveraged traders, but that's part of the natural process. We saw countless traders get liquidated multiple times during the crash. First on the drop, then again when they tried to re-enter too soon. Once that excessive leverage clears out, the foundation for price discovery becomes stronger. As Bitcoin matures, volatility should gradually decline. Two major forces are driving that change. First, the rise of Bitcoin treasury companies that buy and hold substantial amounts on a consistent basis, and second, the introduction of Bitcoin spot ETFs, especially IBIT. These institutional players are now reliable buyers regardless of short-term price movements, which naturally stabilizes the market. However, even with reduced volatility, it's hard to imagine Bitcoin staying stagnant for long. Gold, the world's largest asset by value, has soared nearly 50% this year, showing how global capital seeks safety in hard assets. Bitcoin shares many of gold's characteristics: scarcity, durability, and independence from government control, but with one critical difference. Its supply is finite and verifiable. Only 21 million Bitcoins will ever exist. Unlike gold, we can calculate Bitcoin's exact scarcity. With gold, production increases when prices rise, and there's always uncertainty about how much more might be discovered. Bitcoin doesn't have that issue, and that's what makes it so powerful. Some have speculated that over time, the Bitcoin network could evolve into two forms. One being institutional or corporate-held Bitcoin, often stored in treasuries or ETFs, and the other being freely circulating Bitcoin used by individuals who self-custody and transact peer-to-peer. This isn't happening yet, but it's an interesting potential outcome as adoption expands. Bitcoin's growth also moves in cycles. Not just price cycles, but usage cycles. When transaction activity spikes, fees rise, and people complain that it's too expensive to move coins. Then, as activity cools down, fees drop and people worry that minor incentives will weaken. But somehow, the system always finds balance. Lately, there's been more focus on Bitcoin's Layer 2 solutions like Lightning and Liquid, which help move transactions off-chain. These technologies reduce congestion and make payments faster. However, they also shift attention away from the main blockchain, leading some to suggest that the base layer needs new tools to manage spam and non-monetary transactions, such as NFTs and inscriptions. When it comes to Bitcoin's future price, my thesis hasn't changed. The journey to $1 million is still intact, only delayed. All the structural factors that could drive it higher are already in place. In previous bull markets, The biggest limitation was how fast exchanges could onboard users. Now, with ETFs, that bottleneck is gone. Institutional funds can buy virtually unlimited amounts instantly, on behalf of retail investors, without friction. So the path to massive price discovery is clear. The only uncertainty is timing. Altcoin hype can slow things down temporarily, as capital gets diverted into short-lived speculative plays. But once those cycles burn out, and they always do, the money tends to flow back into Bitcoin. There's also what I call the maximum pain theory, the idea that markets tend to move in the direction that hurts the most people. If everyone expects a slow, steady climb to 1 million, that's probably not how it will happen. More likely, it will come as a sudden violent surge that catches most investors off guard. This is why figures like Michael Saylor keep buying regardless of price. They're not trying to time dips, they know the long-term supply is fixed, and the opportunity window is closing. Every cycle, it becomes harder for new entrants to accumulate meaningful amounts. That sense of urgency will only grow as Bitcoin adoption spreads globally. We've seen similar psychology with gold. When it's cheap, hardly anyone wants it. But when it hits new highs, people suddenly rush to buy, lining up outside shops to get their hands on it. Bitcoin will likely follow that same behavioral pattern. At around 100,000, most will ignore it. But once it hits 500,000, the world will wake up. Governments, central banks, and major corporations will want exposure, and that's when the move to 1 million could happen much faster than anyone expects. Samson also points out that this current downturn isn't a crash, it's a recalibration. These resets are essential because they clear weak hands, eliminate excess leverage, and prepare the market for sustainable growth. Bitcoin's strength has never been about short-term gains. It's about its role as a hedge against monetary instability. As debt levels rise and fiat currencies weaken, more institutions are looking to Bitcoin as a long-term store of value. With nation-states also beginning to explore accumulation, the groundwork is being laid for the next major breakout, one based on conviction and demand, not hype. When asked about the time frame for his $1 million prediction, Mo simply says it's sooner rather than later. He believes the market has been artificially suppressed and that fair value already justifies much higher prices. If inflation is realistically closer to 11%, as many suspect, then Bitcoin's current levels are only catching up with the devaluation of fiat money. From a macro perspective, the U.S. economy is facing deep structural problems. With over $37 trillion in debt and declining demand for U.S. treasuries, other countries are gradually moving away from the dollar. That shift, known as de-dollarization, is accelerating. Paradoxically, Bitcoin may offer the United States a way to re-anchor its currency system, a potential solution rather than a threat. Meanwhile, the growing stablecoin market has become an important buyer of U.S. debt, as many stablecoins are backed by treasury assets. Major corporations outside the crypto industry, from tech companies to financial service firms, are exploring how they can enter this space. That's a clear sign of where things are heading. On the international stage, there's renewed interest in Bitcoin at the nation-state level. Governments in Latin America, Africa, and parts of Asia are beginning to view Bitcoin not just as an investment but as a strategic reserve asset. Samson's team has met with several central banks, promoting the idea of holding Bitcoin on national balance sheets. Political and logistical hurdles make it slow to implement, but momentum is building, and 2026 could mark a turning point for national adoption. For individuals, however, the message remains simple. Self-custody your Bitcoin. Holding your own private keys is the most secure way to protect wealth in a world where governments are searching for new ways to tax or seize assets. As economic pressures mount, some nations may attempt indirect measures, such as taxing unrealized gains, to capture revenue. Owning and controlling your Bitcoin yourself remains the best safeguard. Inflation is far higher than most official statistics suggest, and Bitcoin's price today merely reflects that underlying reality. It's still tracking global money supply growth and mirroring gold's behavior, but true price discovery hasn't happened yet. Inside Bitcoin's developer community, there's an ongoing debate between two visions. One focused on security, hardening, and simplicity, and another seeking to add programmability and flexibility, similar to Ethereum. These discussions aren't destructive, they're part of Bitcoin's evolution. As the network matures, it must balance innovation with its original goal of being the world's most secure, decentralized monetary system. Ultimately, what defines Bitcoin's next chapter will be both individual empowerment and sovereign adoption. As more people hold their own keys and more nations adopt Bitcoin as a reserve asset, it will transition from an investment into the backbone of a new financial order. Do you believe Bitcoin can reach $1 million in the next cycle? Should developers focus more on innovation or maintaining its hard money principles? Share your thoughts below. For more daily crypto updates and insights, make sure to watch the next videos on your screen, and stay ahead of the curve before the next bull run begins.